Hi there, and welcome to the Enlightened Super Trader Education weekly market update, dated the 4th of April 2011. So let's have a look at the Dow Jones Industrial based on the monthly charts, since it's a new month. So this month created currently a new high, 12,419, compared to last month's 12,383, and the previous month was 12,391. So worth it from here. Now creating a new higher high, hence now the market is still very bullish. However, if you can see through right here, though, we have a primary uptrend, secondary uptrend. So what does it mean? That part of the definition of uptrend is a series of higher highs and higher lows. At sometime it has to create a higher low with a very big gap. Also tested actually part of that low right there. Actually the 12,500, creating through a new higher low. So sometime in the future, then a new higher low will also be formed around the 12,000 mark, or even if it breaks through there, then the major one back to about the 11,250, 11,500 is a form of a correction or a retracement. Alright, let's have a look at the monthly chart, where to from here as well, based on the monthly. Now the monthly paints a different picture. Well, 2 weeks in a row after pretty much hammer formation right there. Nice strong demand level about 11,800, and bulls took over. Bullish engulfing continuation of the bulls. We're currently in a level supply and created basically last week a new high, and depending on what it'll do this week, odds and probability, if we can see some form, if the bulls are still currently in control, then odds and probability that is a continuation of the bulls to the upside. Or if not, then if a good strong supply zone, then the odds and probability as well to head back to the downside is more than likely to happen. Okay, but so far, since the new high, the odds and probability it may continue to go up is more than likely, and then we're going to see some form of retracement. Okay, looking at the daily chart. The daily chart forms a different picture right here. You can see through there that we are definitely on the area of supply at the moment. So last week formed new high. Sellers pushed the price back all the way down. Currently buyers push the price back up all the way up, being up currently about 23.31 points today. But you can see as well as away on the overbought. So also form a lower high. So where to from here? Well, yeah, as far as concerned, that's pretty much a uncertainty factor for me. By being in a level supply, the chances of it heading towards to the downside is more than likely to happen as a form of retracement, and then we'll see a continuation to the upside. Okay, that's it for the Dow Jones. So we're in the level of supply at the moment, being overbought. Odds and probability as a form of retracement to the downside is more than likely to happen. Okay, let's have a look at the volatility index and the S&P 500. Looking at the volatility index, currently on the monthly chart, we're in a level of demand. So it pumped up all the way to 32, close to 32.50, and the volatility was so strong it came back all the way down there at the very end. So if it's in level of demand and channeling between 2 points, the odds and probability of it heading back up is more than likely to happen, and hence we're going to see the retracement of the marketplace. Now looking at the weekly chart, shows very strongly that the demand level between the 15, 16 area and 17. So if we can see a form of a rebound back over 20, then this is where the market can come back up. I can come back down as a form of retracement. Okay, 18 is a good strong supply area. Higher in the area of demand between the 16 and the 17-18 mark. So it closed currently at 1750. So if it continues and breaks through this supply zone, then heading back up to the next equilibrium area, about the 19 and all the way to 21, and hence now you can see the marketplace coming back down. Okay, let's have a look at the S&P 500. Looking at the S&P, it's not as strong compared to the Dow. So the high currently is 1337, last month's high is 1332. 1342, and the previous high before that's 1344. So in order to create a new higher high, it has to break 1344. So at the moment, we can see through here as a form of consolidation currently. Well, obviously we're beginning of the new month, or we'll see whether it will continue and break the 1344. But if not, then we can see further drop to the downside to fulfill the higher low about 1220, 1275, 1250, if not around 1150, 1175, even 1200 is a good strong demand level somewhere sometime in the future to fulfill now a higher low, being as well on the overbought situation currently. So looking at the weekly chart, much better, clearer picture. Absolutely, we're in creating new highs, retracement. Odds and probability can now will it continue to go and form a new higher high? If so, then yes, then a continuation of the uptrend. But if not, then we can see back as a form retracement, 1250 around there, and feeling as well this gap between the 1150 1200 area somewhere sometime in the future. Alright, this is it for now for the S&P. Now let's go through and have a look at the trade of the week. Okay, now the trade of the week is the euro against the dollar. Looking at the weekly chart right here, last week formed currently very strongly bulls right current control, now reaching a level of supply at the moment. So the high, form high today 142.68 compared to 142.45 and 142.25. This one right here was about 142.82. So being the peak from the last current peak, last current high, we're definitely a level of supply at the moment. So risk will be very minimum being now EST is method number one. And so we can see on the oscillator as well being the overbought, or is it just an indicator? But depending on how by the end of the week it will perform, this may just be a fake out. No, but the odds and probability for it to head back to the downside is more than likely to happen. So we have a primary uptrend, also we have a secondary uptrend right there. Extend that. So, and if it does, back to the area of demand, which is about the 140 area, 200 pip to the downside before it may continue to go further up. So here's the trade of the week. Okay, and let's go through, look at first another daily on as well on the daily chart. Okay, we can see through here 1, 2, 3, 4. So price is all the way down back to 142. They don't want to go beyond surpass that. So yeah, trade of the week. It's probably to go that it will go back to the south side in the area of demand around at 140, which is about a 220 pips to the downside is more than likely to happen. So to summarize it, the trade of the week is the euro dollar. Is to basically short the euro and long the dollar itself. Okay, so that is my trade of the week. Okay, so basically this is it for this week. And also we're going to begin the 3 weeks of full-on workshop in regards to advanced technical analysis. And if you haven't registered as yet, please do so. There's still more time. That's actually going to start tomorrow. Alrighty guys, other than that, I wish you all the very best. Take care until next time. Happy trading.